Welcome back, Crypto Boy. Subscribe for more crypto learning videos and trading guides every week. Don't forget to hit the notification bell to stay updated with the latest crypto insights. Today, we're diving into Toncoin, one of the most talked about layer 1 tokens in the blockchain space. If you're considering holding Ton for the next 5 years, this video is tailored just for you. We'll break down what Toncoin is, why it's gaining attention, the risks you should be aware of, and realistic price predictions for the years ahead. Whether you're a seasoned investor or just starting out, understanding Ton's long-term potential is crucial. Let's get started and explore if Toncoin deserves a spot in your portfolio for the next half-decade. Toncoin is the native token of the Open Network, or Ton, which was originally developed by the team behind the popular messaging app Telegram. Unlike many other blockchain projects, Ton aims to support high-throughput smart contracts, seamless payments, and a broad Web3 experience, all within a single ecosystem. The idea is to create a network that can handle millions of users, making blockchain technology accessible and practical for everyday use. With its roots in Telegram, Ton has a unique advantage: a massive built-in user base that could accelerate adoption if integrated effectively. What makes Ton stand out from other Layer 1 blockchains? First, it's designed for high throughput, meaning it can process a large number of transactions quickly and efficiently. Second, it supports smart contracts, enabling developers to build decentralized applications directly on the network. Third, Ton is built with payments in mind, aiming to make sending and receiving money as easy as sending a message. Finally, its integration with Telegram's user base gives it a unique edge, potentially allowing millions to access Web3 features without leaving their favorite chat app. Toncoin isn't just a speculative asset, it has real utility within the Ton ecosystem. It's used for transaction fees, staking, and governance, allowing holders to participate in network decisions. The token also plays a role in securing the network and incentivizing validators. As the ecosystem grows, Toncoin's utility could expand even further, especially if more decentralized apps and services are built on Ton. This combination of utility and a growing ecosystem is what makes Ton an interesting candidate for long-term holding. Why is Toncoin on so many investors' radars? One major reason is its potential user base through Telegram. If Telegram fully leverages Ton for payments, mini-apps, and tokenization, it could set Ton apart from other Layer 1s. Additionally, Ton's infrastructure combines social messaging, payments, and Web3, which is a rare mix in the crypto world. On-chain metrics like circulating supply and market cap also show a solid foundation. If the ecosystem continues to grow and adoption increases, the upside for Ton could be significant. Telegram's involvement is a key differentiator for Ton. With hundreds of millions of active users, Telegram has the scale to drive mass adoption if it integrates Toncoin for payments and decentralized apps. Imagine sending money, playing games, or accessing DeFi services all within your chat app. This seamless experience could make blockchain technology mainstream, and Ton would be at the center of it. However, this also means that Ton's success is closely tied to Telegram's strategic decisions and execution. Ton isn't just another blockchain, it's a Layer 1 network with ambitious goals. While many Layer 1s focus solely on smart contracts, Ton aims to blend social messaging, payments, and Web3 features into one platform. This holistic approach could attract a diverse range of users and developers, setting Ton apart from competitors like Solana or Avalanche. If successful, Ton could become the backbone for a new generation of decentralized applications and services. Evaluating any crypto project, on-chain metrics are crucial. For Ton, circulating supply, market capitalization, and usage data all point to a network with real activity and growth potential. These metrics provide a foundation for future development and adoption. As more users and developers join the ecosystem, these numbers could improve, further strengthening Ton's position in the market. However, it's important to monitor these metrics over time to ensure sustained growth. Ton's ecosystem continues to expand and adoption increases, the potential upside could be significant. The combination of a strong user base, innovative technology, and real-world utility positions Ton as a contender in the Layer 1 space. However, growth is never guaranteed. It depends on continued development, strategic partnerships, and the ability to attract both users and developers. Keeping an eye on ecosystem milestones will be key for long-term investors. No project is without risks, and Ton is no exception. One of the biggest challenges is competition. The Layer 1 space is crowded, with established players like Solana, Avalanche, and Cardano all vying for dominance. Ton's ambitious goal of combining social, payments, and Web3 features is unique, but it also means facing off against multiple types of competitors. Staying ahead will require constant innovation and effective execution. Another major risk for Ton is its dependency on adoption, especially by Telegram or similar platforms. Much of Ton's upside relies on these apps fully integrating Ton's use cases. If integration is slow or fails to gain traction, growth could stall. This makes Ton's future somewhat dependent on external factors beyond its direct control, adding an extra layer of uncertainty for investors. Regulation is always a concern in the crypto world. For Ton, broader regulatory or macroeconomic headwinds could dampen price performance, even if the fundamentals are strong. Changes in government policy, legal challenges, or shifts in the global economic environment can all impact Ton's trajectory. Investors should be prepared for volatility and stay informed about regulatory developments that could affect the project. Valuation and expectation gaps are another risk to consider. Some forecasts for Ton are extremely bullish, but if execution is slower than expected, there could be disappointment among investors. Overly optimistic price targets can lead to inflated expectations, which may not be met if adoption or development lags. It's important to set realistic expectations and be prepared for both upsides and setbacks. Execution risk is always present in ambitious projects like Ton. Building a robust ecosystem, achieving mass adoption, and staying ahead of competitors all require flawless execution. Any missteps in development, marketing, or partnerships could slow progress and impact investor confidence. It's crucial for the team to deliver on their promises and adapt quickly to changing market conditions. Let's talk numbers. What could Ton be worth in 5 years? While no prediction is guaranteed, we can look at structured scenarios based on adoption, integration, and market trends. We'll explore conservative, base case, and bullish scenarios, each with its own set of assumptions and price ranges. This approach helps set realistic expectations and prepare for different outcomes. A conservative scenario, Ton experiences slow adoption and moderate ecosystem growth. This could happen if Telegram integration is limited or if competition outpaces Ton's development. Under these conditions, price estimates range from $3 to $7 over the next 5 years. While this isn't explosive growth, it still represents potential upside for patient investors who believe in the project's long-term vision. Base case assumes solid ecosystem growth and a reasonable increase in users and usage. If Ton achieves steady integration with Telegram and expands its DeFi and payments ecosystem, price estimates could range from $8 to $15. This scenario reflects a balanced outlook, where Ton delivers on its promises but doesn't achieve viral, runaway success. For many investors, this is a realistic and attractive outcome. The most optimistic scenario, Ton achieves major integration with Telegram, experiences viral user growth, and sees a boom in payments and decentralized apps. Under these highly favorable conditions, price estimates could reach $20 to $30 or even higher. This outcome would require everything to align perfectly: mass adoption, strong partnerships, and minimal competition losses. While ambitious, it's not impossible if Ton delivers on its full potential. Current forecast models estimate average Ton prices around $6 to $9 in the near future. These models take into account circulating supply, adoption rates, and market trends. While they provide a useful reference, it's important to remember that crypto markets are highly volatile and influenced by many unpredictable factors. Use these models as a guide, but always do your own research and stay flexible. Everything goes right: mass adoption, social app integration, and widespread payments usage, Ton could reach or exceed the $20 mark. This would place it among the top Layer 1 tokens and validate its unique approach to combining social payments and Web3. However, achieving this level of success will require flawless execution and a bit of luck. Investors should weigh the upside potential against the inherent risks. On the flip side, if adoption lags and competition outpaces Ton, the token could remain in the lower price tier. This scenario highlights the importance of monitoring ecosystem growth and staying realistic about expectations. Crypto markets can be unforgiving, and even promising projects can struggle if they fail to deliver. Always be prepared for both positive and negative outcomes. If you're considering holding Ton for the next 5 years, a thoughtful strategy is essential. Start by treating Ton as a part of your overall portfolio, perhaps 5–10% of your crypto allocation rather than your entire bet. This approach helps manage risk and ensures you're not overexposed to a single asset. Diversification remains key in the volatile world of crypto investing. One effective way to invest in Ton is through dollar cost averaging, or DCA. This means entering your position gradually over time rather than all at once. By spreading out your purchases, you can mitigate the risk of buying at a market peak and smooth out your entry price. DCA is a proven strategy for long-term investors looking to reduce the impact of short-term volatility. Staying informed is crucial for long-term holders. Monitor key milestones such as deeper integration of Ton with Telegram or other major platforms, growth in Ton's DeFi and payments ecosystem, and on-chain metrics like staking rate, network fees, and active addresses. Also, keep an eye on the competitive and regulatory environment. These indicators can help you assess whether Ton is on track to achieve its goals. Having an exit strategy is just as important as your entry plan. Consider setting target zones for taking profits. For example, if Ton reaches $10.15, you might take partial profits. If it approaches $20 or higher, reevaluate your position. Also, think about what you'll do if Ton stays under $5 for several years. Being prepared for different scenarios helps you make rational decisions, even in volatile markets. Crypto is a fast-moving industry, and staying flexible is key. Be ready to adjust your strategy based on new data, major project changes, or shifts in the market. Flexibility allows you to capitalize on new opportunities and minimize losses if the landscape changes. Remember, successful investing often means adapting to new information and not sticking rigidly to a single plan. Summary: Toncoin stands out as a compelling long-term candidate in the crypto space. It brings together a real app user base, Layer 1 infrastructure, and a clear utility token. If everything aligns, strong ecosystem growth, payments and social integration, and minimal competition loss, holding Ton for 5 years could yield significant returns. However, the journey will require patience and a willingness to ride out volatility. High potential always comes with high risk. Execution issues, slower adoption, or regulatory setbacks could limit returns. It's important to balance your optimism with a clear understanding of the risks involved. Only invest what you can afford to lose and be prepared for both ups and downs along the way. A balanced approach helps you stay grounded and make better decisions. Are you willing to hold through volatility for 5 years and remain patient? That's the question every Ton investor must ask themselves. The crypto market is known for its wild swings, and only those with a long-term mindset are likely to reap the rewards. Patience, discipline, and ongoing research are your best allies on this journey. Do you believe Ton will lead the next wave of social payments blockchain integration? With its unique combination of technology, user base, and vision, Ton has a real shot at shaping the future of decentralized applications. The coming years will reveal whether it can deliver on its promise and set new standards for the industry. Thanks for joining this deep dive into Toncoin's 5-year outlook. We've covered what Ton is, why it's attracting attention, the risks involved, and realistic price scenarios. Remember, investing in crypto is about balancing potential rewards with the risks. Stay informed, stay flexible, and always invest responsibly. If you found this useful, don't forget to subscribe for more crypto insights. Thank you for watching. As you consider your next steps, remember to keep learning and stay updated on the latest developments in the Ton ecosystem. The crypto landscape is always evolving, and staying ahead requires ongoing research and adaptability. We'll continue to bring you the latest insights and analysis on promising projects like Toncoin. Let's clarify what a Layer 1 blockchain is. In the crypto world, Layer 1 refers to the base protocol of a blockchain network, like Bitcoin or Ethereum. These networks handle their own security, consensus, and transaction processing. Ton is a Layer 1, meaning it operates independently and can support its own ecosystem of apps and tokens. This is different from Layer 2 solutions, which build on top of existing blockchains to improve scalability or add features. Web3 is a term you'll hear often in discussions about Ton. It refers to the next generation of the internet, where decentralized applications and blockchain technology empower users to control their own data and assets. Web3 aims to move away from centralized platforms and give more power to individuals. Ton's vision of Web3 inside an app is about making these features accessible to everyone, not just tech experts. Staking is a key feature in many modern blockchains, including Ton. When you stake your tokens, you lock them up to help secure the network and validate transactions. In return, you can earn rewards, often in the form of additional tokens. Staking also gives you a say in network governance, allowing you to vote on important decisions. It's a way to support the ecosystem while potentially earning passive income. Dollar cost averaging, or DCA, is a popular investment strategy. Instead of investing a lump sum all at once, you spread your purchases over time. This helps reduce the impact of market volatility and lowers the risk of buying at a peak. DCA is especially useful in the unpredictable world of crypto, where prices can swing wildly from day to day. Governance in blockchain refers to the process by which decisions are made about the network's future. In Ton, token holders can participate in governance by voting on proposals, upgrades, and other important matters. This decentralized approach ensures that the community has a voice in shaping the direction of the project, rather than relying solely on a central authority. DeFi, or decentralized finance, is a growing sector within blockchain. It refers to financial services like lending, borrowing, and trading that operate without traditional banks or intermediaries. Ton's DeFi ecosystem could include decentralized exchanges, lending platforms, and payment solutions, all powered by smart contracts. This opens up new opportunities for users to manage their assets directly on the blockchain. On-chain metrics are data points that reflect activity on a blockchain network. These include things like transaction volume, active addresses, staking rates, and network fees. Monitoring on-chain metrics helps investors gauge the health and growth of a project. For Ton, strong on-chain metrics indicate real usage and adoption, which are positive signs for long-term value. Portfolio allocation is about deciding how much of your investment capital to allocate to different assets. In crypto, it's wise to diversify rather than put all your funds into a single token. For Ton, experts suggest allocating 5–10% of your crypto portfolio depending on your risk tolerance. This approach helps manage risk and smooth out returns over time. Exit strategy is a plan for when and how you'll sell your investment. In crypto, setting profit targets and stop-loss levels can help you lock in gains and limit losses. For Ton, you might decide to take partial profits at certain price points or reevaluate your position if the project underperforms. Having a clear exit strategy helps you avoid emotional decisions during market swings. Regulatory risk refers to the possibility that changes in laws or government policies could negatively impact a crypto project. For Ton, this could mean restrictions on usage, legal challenges, or even bans in certain countries. Staying informed about regulatory developments is crucial for managing this risk and making informed investment decisions. Volatility is a defining feature of the crypto market. Prices can swing dramatically in short periods, creating both opportunities and risks. For long-term Ton holders, it's important to expect volatility and not panic during downturns. Staying focused on your strategy and long-term goals can help you weather the ups and downs. Mass adoption refers to a technology or product being widely used by the general public. For Ton, mass adoption would mean millions of users leveraging its blockchain for payments, apps, and more, especially through platforms like Telegram. Achieving mass adoption is the ultimate goal for many crypto projects, as it drives value and long-term sustainability. Ecosystem growth is about expanding the range of apps, services, and users on a blockchain network. For Ton, this means attracting developers to build new decentralized apps, increasing user engagement, and forming partnerships with other projects. A thriving ecosystem is a strong indicator of a project's long-term viability and success.